The Morning Markets Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. Tommy O'Brien coming to you live from TFNN, 8:30 a.m. Wednesday morning. Happy Thanksgiving, early Thanksgiving Eve out there to everybody. Stay safe, whether you're on the roads with family. Enjoy some good turkey. Enjoy a couple days off. Maybe check in on the markets Friday morning. Markets open a half a day on Friday. TFNN will be closed. We'll be sleeping off some turkey Friday morning, checking out the markets from home. Right now, we get the markets a little bit mixed, pretty calm action coming in to the day before Thanksgiving. We're going to get some data right at 8:30 as we're going to get weekly jobless claims a day early, as well as some other data points we'll go over in a second, hitting the tape right now. S&Ps, we got some earnings as well in retail. Nordstrom, John Deere out this morning. Nordstrom maybe last night, I believe. Gap last night. Some reaction overnight. Right now, S&Ps minus 2 points. You see the run we had, even in acceleration last night. S&Ps making it up to 36.55, currently trading at 36.30. Kind of right where we were hanging out all yesterday afternoon, just hanging out at around 36.30. NASDAQ in positive territory. We're as high as 12,173 in the NASDAQ 100, currently trading 12,102. The Dow Futures, after reaching 30,165, the highs overnight, back under 30,000 right now for the futures, 29,952. First time ever yesterday, of course, closing above 30,000 for the Dow. And one of those data points, so we'll bring them over as they come in. Weekly jobless claims ticking up, 778,000. The estimate was 733,000. I believe the way it went last week came in at like 740. The estimate was 710, something like that. So now we're up to 780. Again, ticking up yet again. Market was looking for 733, a little bit higher number than initially expected. We'll see if the market reacts to that at all. S&P is minus 1. So if anything, it's rising. Russell, somewhat flat. The Russell for the month of November, folks, how about this one? Let's back it up. How about 20% just for the month of November? Quite the month we've had. You back it up. There's October 30th. There's November 2nd. Let's just call it 1550, and you're up to 1850. Easy math. 300 points. If the index was 1,500, that would be exactly 20%. And you see, we actually started it. You closed out that day at a price point of 1544. Was where we closed out, make it up to 1863. Remarkable action. Even the S&Ps, looking at the month that we've had. We started off the week, there was an article from JP Morgan talking about the rebalancing that will have to take place because of just the month of November. The acceleration off mostly this vaccine news that we've got continuing Monday after Monday after Monday. But just the S&P, we close out at 3278 for the month of October. Right, you're 350 points above that level in the S&Ps. Remarkable action. You open trading on November at 3260, and we're trading at 3631 in those S&Ps. Okay, commodities, crude continuing to rise, well above now this consolidation area it had been in all the way, you could say, from May. Crazy when you talk about from about 35 to the upper boundary of about 43.50. Crude climbing above that level, putting it on a 15-minute. You see the acceleration all week from $41 last Thursday, currently trading at $45.44 in crude. We got to jump over to Bitcoin, up $230. We made $19,515 yesterday, currently trading $19,340 right now. And the gold contract catching a slight bid. We were under $1,800 yesterday. We're up $8.80 right now at $18.19, the price of gold. Man, we started the week, though, at about $18.70 when you were coming into early Monday trading. You opened the session Monday at about $18.65. Then, of course, we got, I believe it was PPI, CPI data, PPI maybe potentially early Monday, sent the markets lower, some haywire with the dollar going on there as well. And on the heels of that weekly jobless claims number, we're actually seeing the market tick up a bit. Not very worried as the market always forward looking. And that's the conversation going on right now, right? Obviously, with new highs across the board, everything going up. I mean, yesterday we saw airlines, cruise ships, hotels, Marriott, Hyatt, very much higher. Yet, work from home, the direction ETF for stocks that have accelerated like Zoom, along with many others, positive for the day. Why are all the airlines, all the hotels, all the opening back up stocks, including the likes of Disney? I mean, quite an acceleration. These stocks have had, Uber was up big yesterday as well, a reopened trade. Yet you didn't see any of the pullback in the stocks that have benefited so greatly when the restrictions are put in place. You should see kind of that rotation. How are all the open up stocks accelerating higher? And none of the stocks that benefited when they went lower, they're not going lower. There has to be some relationship if there was one. Not really. It doesn't have to be anything. You just might see a large consolidation in some of the biggest stocks out there. Talking about the tech stocks, as some of the other stocks have been hurt so bad, get given a chance to accelerate as we come out of this pretty interesting time. All right, jumping around. So data, we got weekly jobless claims. I'm going to jump real quick. What else we had going on here? Let's see. Yes, they were talking about weekly jobless claims. We're also going to get the second reading of third quarter GDP and durable good orders also at 8:30. So that's going to be hitting the tape. We'll pull up that in a moment as well. Yeah, and so far that's about it. So 778,000 for the week ended November 21st. The expectation was about 733,000. Prior week, 742,000. I was reading that on the second screen. Okay, jumping around to companies with earnings. Let's kick it off with Gap. They had numbers last night, tumbling lower on earnings falling short. And we already got that news. Remains optimistic. Fiscal third quarter earnings fall short of estimates despite sales gains at Old Navy and Athleta. Spending more on marketing in a bid to define its core brands and grow market share. Getting into the numbers. Earnings 25 versus 32 cents. They beat on revenue. Same-store sales, how about this? Up 5% versus a decline of 0.3%. Seems like the same-store sales estimates were just way off across the board. Pulling up theirs, as in beats across the board, no matter who you were, whether it was Home Depot putting up like 25 or 30% same-store sales versus the expectation of 15 to 20. But nonetheless, not quite what the market was looking for. From 27 down to 24. We're going to jump around Nordstrom. We'll take a look at the next one, JWM. A little bit of a different story. From $24.55, we're up about $1.30 on their numbers. Nordstrom shares rise as retailers show signs of recovery, helped by its anniversary sale. Digital sales in the 3 months, $1.6 billion, and more than half of the retailer's entire business. Pretty remarkable, and that's what you got to be doing right now for sure. You can see why the market rising on that news. $1.6 billion, 54% of the retailer's business online. Continuing to amplify categories that are relevant with customers during the pandemic, such as activewear, wellness products. Seems like doing it online. Nordstrom Rack could be a major growth driver because it's one of the few in this category with large online presence for a retailer's off-price store. I'm a big fan of Nordstrom Rack. You get some great products there at a discount that have built up in their inventory. Earnings, 34 cents versus a loss of 6 was expected, and they basically come in line with revenue. Net income falling to $53 million or 34 cents a share from $126 million. But big numbers, doing half of their business, more than half of their business online, and they're trading a little bit higher today. Stay tuned, folks. S&P's minus by 2. NASDAQ positive 31. We got a lot more to cover. We'll be right back in 3 minutes.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The gold report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The gold report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The gold report comes with a 30-day money-back guarantee. Go to TFNN.com and order the gold report now. Protect your buying power. Order the gold report now.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We get the S&P's -1 right now. Market just hanging out on that weekly jobless claims number. Getting into it a little bit more for a moment, looking at continuing claims. So the headline number comes in at initial jobless claims, 778,000. The weekend in November 21st. The figure rose by about 78,000 during the week in terms of without adjustments for seasonal fluctuations. The figure rose by about 78,000 during the week, which coincides with the reference period for the monthly jobs report. And then you have continuing claims. Total pool of Americans on ongoing state unemployment benefits. Key here is state, because you're seeing a lot of people exhausting regular state benefits and going on to additional extended assistance programs. But you have unemployment benefits on an ongoing continuing claim falling by 299,000 to 6.07 million. But as they say, but the number of Americans on an extended assistance program continued to increase, a sign that more people have exhausted regular state benefits. I mean, we're approaching December, right? These lockdowns began in March, and we saw a pretty instant spike in the weekly jobless claims that came in. Millions of people right away. So even if you call it beginning of April, we're coming into beginning of December. You're talking about 8 months. Remarkable that we're stretching 8 months. All right, earnings season still in full swing. Good time to be selling computers. HP and Dell. I believe Dell's trading higher. I believe they are. Let's pull them up. Okay, they're flat now. They were to 73. They were lower last night. They're right now trading up about 13 cents. But HPQ, Hewlett Packard, they are up from 21.75 up about $1.10 to 22.85. Looking at their numbers. Earnings beat, rising PC notebook sales. What's interesting here, I think I had to look at, I think I've purchased myself for family members, for kids around the house, homeschooling, right? 2 laptops, myself, HP. I'm a big fan of HP. Here's a word of advice. I have bought HP computers directly from HP in the past. Sometimes you get to tailor it on their website. They have great computers, I think. It's nice when you get to tailor things. It comes with, of course, a warranty. I think it's a year-long warranty. We're digressing, but it's interesting because I learned something. So I say, this is great. HP's got a great sale going on directly on their website. What do? I go in, I order direct from their website. Well, what ended up happening is I've had a couple problems with that HP laptop, and instead of just being able to bring it to Best Buy at least, and even if they have to ship it out or something, do it pretty quick, I am forced to just ship it directly for service. You're out of commission for like a period of a week at a minimum. If you ship it a few days, they ship it back. very difficult to operate in a world where you just got to ship your computer away to get it serviced in any fashion. That's how it works. So kind of double-edged sword there of a story. But HP, they are higher, getting into their numbers. 62 cents a share versus 52. Revenue, they beat by $600 million at 15.3 versus 14.7. They're forecasting 64 to 70 cents in adjusted earnings. The market was looking for 54. Always nice when you say in the future we're going to beat in an even bigger way. The company's largest business segment, Personal Systems, includes PC notebooks, delivered $10.4 billion in revenue, flat year over year, but remarkable, right? And below 10.5 that they were looking for. Within that unit, notebooks rose 18%. There you go, right? Notebooks, almost a 20% pop. 7.41 billion people sought out computers to help them work and learn from home because of the coronavirus pandemic. Makes sense. Although, depends where you go, because by that theory, what's going on over here, right? Because those two computers that I talked about that I bought, and this does not include the one I told about story about buying it from Hewlett-Packard itself a couple years back. The ones I bought were from Best Buy over that same period. And Best Buy had a great quarter. But you know what they said? We can't provide any forecast. And guess why? Because everybody like me probably already bought the computers they need. I ain't buying any more computers for the next year. That's something that's going to happen when you have Best Buy pulling their guidance. That's a tough one. But then you have Hewlett-Packard, HPQ. I don't know where they're going to be selling these laptops if it's not going to be at Best Buy, because they do quite a business, I'm sure, at Best Buy. Hewlett-Packard up to about $22.89 on their numbers, and jumping over to Dell, as we said, at about $70.65. All right, John Deere out with their numbers this morning. They beat by $1.05, $2.39 a share. How about $8.66 billion? They beat by more than $1 billion. Worldwide net sales and revenue decreased just 2% to $9.731 billion for the fourth quarter. Declined 9% to $35.54. Quite a number. $35 billion for the year in revenue. Outlook: net income attributable to Deere & Company for fiscal 21 forecast to be in the range of $3.6 to $4.04 billion. And we got John Deere trading higher, 268 from about 262 on their numbers this morning. All right, jumping around to some of the FANG stocks. Amazon shares trading a bit higher from 31.18 to 31.42. It was interesting yesterday. I talked about, right? So, you had some of the biggest gainers of all when restrictions were put in place. Companies like Zoom not getting hit at all, right? Companies like Microsoft accelerating higher. Companies like even, staples of people stocking up, whether it's Target, great chart. Walmart, great chart. The home repair companies, Home Depot, Lowe's, great charts across the board. Meanwhile, you have airlines skyrocketing. Look at that, from $12.46 to $15.19 for American. Delta Airlines from $36.97 last week up to $42. And even cruise lines up in a big way to $21. AMC. Tom and I were talking about this yesterday in the morning. He was talking about it in a show yesterday. Looks like they got some financing. They're not going to go BK. The stock goes up to $5 yesterday. Already, folks, these are big numbers. You were up to $5. And just like that, you trade down 15% from 5 to 425. That's a 15% drop in this equity. Be careful. What is going on? To put things in context here, twice investors have gotten a little bit ahead of themselves, to put it bluntly, to put it lightly, right? June 10th, it was as high as $7 and change. September 3rd, September 2nd, it almost made it up to $8. It then tanks to $2. What was it doing at $8? I remember having these conversations on the air. You climbed, the high, 778, the high February 20th, and we got to a price point of 771. You were basically at the highs of the year, let alone higher than anywhere we were in January or February for this stock before they had to shut down for the year. You're telling me that AMC is worth more on September 2nd than it was on February 2nd of this year with everything that's happened in those 7-month period? No, not the case. And AMC goes from 8 to 2, and now we're back to 5, even 5, folks. We were trading at almost 6 in January before all of this started. They have a long way to go ahead of themselves. The movie theaters were already in big trouble. And look at this chart, from 34 to 20. You back it up even more. We're talking about, so that's all. It goes back to 2014. But we were just at $1.95. We were just at $2 again within the last few days. So I don't see that company. And listen, you can make some plays for a company like Boeing, right? For maybe one of the best airlines out there, Delta or something like that. You put some money in, the world comes back to normal and all is well. But man, AMC, they got some problems, period, in terms of competing with Amazon. Netflix at 484 this morning. Disney at 150 this morning. When we'll talk about real quick an article when we get back. I was reading on Bloomberg. It's talking about Disney should act. Next act should be R-rated. They got nothing R-rated for 18 plus on Disney, and they got a lock on all the kids and the families. But how they expand that lineup, they raise some prices maybe now that they're dealing with 70 million plus subscribers. We'll take a look at Disney. We'll take a look at some other equities for Wednesday action. Stay tuned, folks. We'll be right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
Whatever you think about, you bring about. Whatever you focus on grows.
you see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Pretty tame market for the half hour. We get S&Ps within about a point of where we started the program, trading -2 at 36.30. NASDAQ in the positive, Dow off 54 points right now. The Russell negative by 4. Jumping back to that weekly jobless claims number. Pretty interesting information in there, a little bit deeper. So, as Bloomberg put it, right, as they say, here we go. The number of Americans on an extended assistance program continue to increase, a sign that more people have exhausted their regular state benefits. Getting into those numbers, jumping around to the next article, Enrollment in the Pandemic Unemployment Assistance Program, which provides benefits to those not normally eligible, decreased by 8,000 to 311,000. However, those on the Pandemic Unemployment Assistance Emergency Program, which helps those who have lost their benefits with 13 more weeks of compensation, surged by almost 500,000 to 9.15 million. Now, that's a delayed data 2 weeks before. Continuing claims is a more delayed data than initial weekly jobless claims. Total receiving benefits rose to 20.45 million for the week ended November 7th, up 135,000. That compares to just under 1.5 million a year ago. Crazy numbers when you look at this market and you look where we are and you look at those numbers. Be a little careful, folks. Okay, there's going to be strong stocks, the tech stocks. The world is changing, folks. Technology is here in a big way. As we open back up, I've been a big bull in stocks like Disney, Uber. You've seen huge accelerations already in some of these equities. Okay, look at these pops that we've got. Even Disney, the upper end, we just climbed above that trend line, you could argue. Uber shares. I mean, where are we there? We're well over anything we've been in at, okay? So even the stocks we're going to see some basing time. Even a stock like Boeing, you're now coming up to where we were at 232. Yeah, these are companies that you'll see an appreciation. But man, oh man, be careful, folks. When you see those numbers with 20 million people on an assistance program, a lot of people delaying payments for their housing, all of this is going to come to roost in a little bit. Probably get more stimulus in the next couple months. But man, those are big numbers. And hopefully these vaccines pump out. Everybody's back on the rolls. Stay tuned, folks. Live programming all day at TFNN. Happy Thanksgiving. We'll be right back with Larry Pesavento coming.